What do you say we dig a little deeper in today's Real Estate Real Talk? Tech companies have been in the spotlight recently, and not for good news. We've got Meta laying off about 11,000 people, Amazon planning to let go about 10,000 people, and then there's Twitter, which we've seen get rid of just about half of their workforce. So why am I bringing this up when we're talking about houses? Because these massive layoffs could actually impact the housing market. So here to explain, Los Angeles real estate agent Keri White. Hey, Keri.
Hey, good morning. We got jobs.
We do, and we've talked about this via email, of course, and I was a little confused. What does this have to do with anything? We are talking about these layoffs, but how many exactly have there been so far?
Well, overall, as you were just mentioning, between Meta and Facebook and Twitter and Amazon, we've had nearly 137,000 workers let go from 850 tech companies and startup companies just this year alone.
When we look at those numbers, that is a ton of people. So how does this impact people making these big financial decisions, these big investments, when it comes to things like buying a home?
Yeah, well, whenever you're teetering on the idea of not having an income or a job, you're not going to be jumping into big financial purchases. So overall, they don't. Most home buyers want to ensure their job is secure before making any financial decisions. And not just that, not just home buying, but home renovations or any upgrades they want to make to their home. So about 15% overall have been delaying their home purchase just based on job uncertainty this year.
Now, we've talked about this here on Current about the housing market and where it stands right now, but could these rising layoffs lead to a housing crisis?
Well, it's like anything. Uncertainty is the number one driving factor to stop you from making any decision. And this goes across the board for anything in life. Uncertainty is something that's wired in us as human nature. So if you've got a pandemic, if you've got riots, if you've got a war, all of that is going to fuel the fire of the housing market and how it's impacted for the most part. So anytime there's layoffs, there's a reduction in the number of buyers in any given market. Like the San Francisco Bay Area, the impacts of the tech troubles hasn't hit the broader housing market, but some of those prime tech areas in San Francisco have seen a shift in about 14% drop year over year. But many economists are saying job loss isn't going to have an impact on the housing markets overall right now. And that's simply due to the fact that unemployment is so low. And I don't know about you guys, but it's been very hard to find good employees. So this might open up a sector of people to actually get into different positions or get into different tech companies. But I think this overall layoff is preemptive to try to cut losses right now because we don't know what kind of times we're going into.
And you had mentioned, Keri, San Francisco. Are there any other major areas, certain areas of the country that are more likely to be hit harder by some of these tech layoffs?
Absolutely. And a lot of these areas that had bigger booms with the last couple of years, instead of going up to 20 to 30%, they went up 40 to 50%. They're getting hit the hardest because that's where a lot of tech companies were going. So you've got Silicon Valley, of course, Seattle, Sacramento, Denver, Austin, areas in North Carolina, Salt Lake City. So all of these hotspots people were going to because they couldn't afford maybe Miami, LA, New York, San Francisco. They're seeing the biggest impact. They're getting harder hit right now.
And I know we've asked this before, but the fear that we could be heading towards a recession is coming up again, once again, in all of these news and headlines. Do you think that that's the case?
Well, depending on who you ask, we already are in a recession. People keep saying, oh, we're going to have a recession. I mean, we're technically in that. Every single person has a different opinion. But the thing with the housing market is you've got your big key factors of unemployment, which is low. We have 2 jobs for every unemployed person. The higher interest rates are slowing down the economy. The minute those go down even slightly, we have more buyers jump back in. You look at the foreclosure rate, which is still historically low, and you look at supply and demand. Right now, our population of millennials and Gen Zs, we are overpopulating the world compared to the housing that we have. There's, I think it was 30 million, 9 million millennials turning 30 in the next year. And as millennials get older these days, they start to get married, have babies, want to form households. So there is a strong demand that is being not really addressed as much as these other fearful headlines overall.
It's such an interesting conversation about how these two things intersect. We thank you so much, as always, Keri, for your time.
Absolutely.
You can get more advice from Keri by going to her Instagram. That's at Keri and Keri Ann. And then also in the meantime, why don't you subscribe to her YouTube channel? That's Keri White Real Estate.